Going down to risk management, I have a 10K account, right? I have a 10K account funded. I have a 25K funded. I have a 100K funded. On my 10K, for these 44 pips, actually, I am using more. I am putting it below here, around 89 pips, 90 pips. I am using only 0.1 lots. You see, don't get ahead of yourselves. It's a profit account, and all I am risking is only about $100, which is less than 1% of the account, and I will be making $260. That is like 2.5% of the account. Never you get ahead of yourself and say, if you don't give me trade, then you go and over leverage. You will wound yourself. Okay? So for that account, I'm using 0.1, sorry. Now, on the contrary, if price comes back down and does not tap me out and then create some fresh structure for entry, and I have a tighter stop loss, then I can use a bigger lot size that will still be risking only $100. So I will have this one risking 100, risking 90, and then I will enter that position that will still risk 100. So at the end of the day, in total, I am just risking like $190. Do you understand me, guys? And then the bigger lot size would give me more if it goes our way. That is proper risk management. If you've not learned anything in this bootcamp, this is one thing that you should bear in mind. Always be risk management conscious. That is what has kept me very long in this market. Sometimes I feel I am not even ambitious enough. Let me open up to you guys a little bit. Let me pause the recording. This is not necessary in the video. So always consider risk, proper risk management every time, every single time. It's very important. All right, it's very important. And you don't want to be that guy that will come up every time and say, I blew this account today. How did you blow it? You went against the rule. Like, why would you go against the rule? How did you even go against the rule in one day? What were you doing? You blew the account and then you started revenge trading. That's the problem. That's the problem. So imagine me on a 10K account, I'm risking only $89. I know somebody else right now on a smaller account is risking more than me right now. On a smaller account is risking more than me right now on this trade. If you just fuck yourself up, and don't be my fault. Good. Let's go back to Euro USD and GBP USD and see what they are doing. Okay. GBP USD is still buying. Euro USD is still buying. Good luck to that. GBP USD, I would like to see how it will react when it gets here on the 1 hour time frame. So right now, I am not doing anything. I am not trading. Early morning trades are always good for me. I see my Judas swing, I move, but obviously there is no Judas whatever here. Okay, so we move. It's okay. 2025 on the 5K account is very, very okay, actually. Very okay. So when you take like 2 losses, 3 losses in a day, you've never lost up to $100. Your mind is still at rest. Serious rest, actually. They don't do trade here. So while we wait for all these trades to come up, let us get into some entry model patterns, and you are going to enjoy this part. Give me a moment, guys. One pair. If you are not really solid yet as a trader, stay on one pair. If you are not really solid, look for one pair and trade only that one pair if you are not really solid yet. Here you see somebody is asking what is the SF for Euro AUD. I don't know. I don't know. Open your chart. Open your chart. And put your SL below structure. Put your SL below structure. I'm not trying to punish you. I'm just trying to let you know that you put in some work too, or else you'll be totally blind on that trade. If I tell you the SL, I told you the entry. If I tell you the SL, you'll be totally blind on that trade. And then you just be expecting something to happen. Go and open your chart and look for the SL that will suit you so that you can know how to actively manipulate your way around that trade. Hold on. So that you can know how to actively manipulate your around that trade. When the trade starts doing it now, you will know what to do. But if you go and ask for SL, now I tell SL, you won't know what to do with the trade. I might have closed out on the trade when I see that the trade is doing something, and I won't tell you. And then you'll still be in that trade because SL. Or Benny Jones Linus. Okay. Okay, let's get on some entry patterns. I'm on my big screen as I go there though. Still loading. Know what I've been updating since. Don't delay the update within no consignment. Stay on this trade, guys. This trade is going to buy. Stay here. Stay here. It's going to buy. You can see the sweep. You can see the takeout of the highs, liquidity formation, coming back to this whole area. Stay on this trade, guys. And if it sells, well, good luck. It's not my father's property. Oh, sell none here. Let's get on some patterns quickly, guys. Let's get on some patterns. And somebody said USD card. Sorry, before we go on the patterns. So let us know what we are doing here. Yeah, market has started this imbalance. There is nothing market is looking for back to this place anymore. USD cards likelihood of buying back. You know, I told you I'm still a buyer. I'm still singing the praises of USD card buying. I don't care what you think about it. You see this whole area here on the 1 hour time frame, which is around the psychological level of 1.34000. It's a very good psychological level. I've marked that a long time ago. When price gets into this area, which can be today or tomorrow, then on Thursday, my very beautiful Thursday, we might just start buying. Okay, and like I always say, my buys is still up to 600 pips. My buy is still up to 600 pips. So, and is that one day I want to catch? I don't have business with any other thing. Okay, so look at it. It's coming. Jesus Christ. See, price is coming for the 200 EMA and it's around the psychological level. That's the 200 EMA, that's psychological level. Keeping it simple. 200 EMA, psychological level. Price is coming for that. And then what next? We are buying. You see, we are buying to the next psychological level, guys. But I would like to take profit at this first one or at the second one. And that will be, let me see, from here, we have 400 pips, we have 500 pips, and we have 600 pips. You're welcome. You're welcome. Okay. Although price has swept this liquidity already, this liquidity here, and that was my main aim for buying all the time that we were here. That was my main aim for buying all that time, and I swept it already. But you see this high here? I want to call it liquidity. So I want price to come and still sweep this high. You know, because there are lots of sellers in the market right now. A lot of sellers. People are trying to sell. USD card on the daily you know that this man has been ranging, right? And on the daily time frame, where the big players are, they will be sweeping themselves. Is that their own sweeps now that we are used to making money? So when they want to sweep the buyers, it will be a massive buy for us. That is our own 400, 500 people that want to eat from. Meanwhile, they will be buying the market to come and sweep those that are selling. That's the big banks that are selling. Boom, this area here. This area there. And that is it. Okay, so I still I am still very much interested in that buy. Okay. So when price gets to this place, go and mark your charts. Mark 1.34000. That's the area. Put your 200 EMA there. Please don't ask me how to put EMA on your chart. Check YouTube for that. Then this is a boot camp, not an advanced class. Okay, we are trading together. We are learning few concepts together. That's what the boot camp is for. Okay, so yeah, we do this and look at that other block there. Sweet and beautiful. My God. Look at that. See that other block there? So beautiful. So beautiful. Although it's going to be a wide stop loss if we are going to take it directly on the daily time frame, but we will not do that. Okay, we are not a top-down analysis swing trader, $50 billion account management. We are not those people. Okay. So right from here, we should have our buys load up. Somebody will say, but the market should not clear, did not take out the highs. Hold on. You see these lows that form? Did you take out the low? No. So let us look for buys. God bless. All right. So that's it for USD cards. So let's get to what we want to do quickly. We are already wasting time. Before this time ends, the time ends, we join again. I think I'm enjoying today's class. And I'm feeling very good now. Like last week. Expectational order flow, liquidity delivers from external range to internal range. What I want to show you guys is something that I paid $250 for a boot camp for. Boot camp, not full time. This January, just this January. Okay, so here we go. Now, there's one model that I always use when I say, guys, just simple resistance. Let me show you now. Please, if you have your pen and your paper, you should start writing these things down. You start drawing it as I'm drawing it. Or draw it roughly, go back to your charts, and then put it on the screen like this and draw them again. You will need it. You are gonna need it. Okay. So let's say price moved up like this, right? And then we have a range. Oh, no. Let me do this one. Let me go to a smaller time frame. Okay. So let's say price gives us a pull up and a range. What's wrong with this guy now? This is not what I want to see. Let me look for another pair to draw it on. Look at this sweep today. I laugh at my own sense of humor sometimes. Okay, let's see this middle. Hopefully it draws well now. So price goes up. Aha, it draws well. And then gives us a range. Gives us a range, right? And then we have a massive pull up like this. Price would come gradually right down back into this range and then buy again. This is our first model. The first model is based off of this whole range here. It's based off of that whole range there. I don't want that thing to keep it so much. It's based off of the whole range, right? The whole range is where price is coming back into. You see that impulsive movement that swept the whole range? Price will gradually come back into that whole range and then move from there. These are some setups that you see as entry setups. It can be vice versa, okay? It can be vice versa. I was showing you guys this type of setup on Euro AUD. This is what happened on what time frame, boss? Time frame? I don't understand. On Euro AUD, we saw the range, we saw the push up, and then price coming back to the range. Let's go back to Euro AUD quickly. Let me show you that entry part there. Oh, sorry, it's not Euro AUD. Okay, it is. Okay, see price giving us a pull up here. Okay, a pull up as usual. The range, the pull up, and then the gradual fill up back into that range, and then the buy. Okay, so following that pattern, and I told you guys I have to share this pattern with you guys. So when you need to go and practice it on your own, so you understand. So following this pattern, you can see the pull up, this bullish candle, the range, the pull up away from the range, the pull up, this is still the pull up, the fill up back into that range. You can see price came back into that range. So this trade will be invalidated when price breaks this range, not when price breaks this low. When price breaks this range. That is why my stop loss is here. If so, my stop loss would have been here. But trust me, there's no need. Just leave your stop loss here, below the range. Price has gradually come back into that range and is buying. Do you see it? This is pattern 1. Let me count how many patterns we have. I call this range, this type of stuff, the range created demand. This is a demand. This is a demand. This is a demand. But the ranges that happened created the demand because of what it wanted to do in the market. Okay? Okay? Don't worry, you see another entry model here. This is 1. We saw this on the 1 hour time frame. You can go down to your smart time frame and look for another type of entry model pattern. Okay? Now, you see this topic. This is one of the topics that I should be charging like $200 for just 2 Zoom sessions. For just 2 Zoom sessions. But you are getting it in 20,000 naira discount. Please don't joke with it. I am recording. If the meeting ends, we join again with the same link. I am recording, don't worry. I am recording. So this is this pattern. This is the first pattern. Now, there's that type of pattern that is very, very similar to this. Very, very similar to this. It is the pivot created range. Let me not just use big words. There's no need for big words. It's just something similar. We have a pull up. We have a little pullback. We have a massive pull up. And then we have a gradual fill up like this. We have a gradual fill up like this, gradual fill up like this. Back into this level here, back into this level here. And then buy. This is where price came to tap into. So buy. Most likely 50% soon. It doesn't, most of the time, doesn't cross that 50% soon. Based on my own research, it doesn't cross that 50% soon. And it buys like directly from there. Okay. So when you see patterns like this, you are likely to know what the market is going to do. So when you see me tweet and say, I have some A+ setups, these patterns are most of my A+ setups. A pattern that I have practiced over time, I am looking at it on my chart like this, playing out. What do? I just sit down and wait for the pattern to play out completely, right? And then I strike. No stress, no hassle, nothing whatsoever. You just do what you got to do, and then you move on, okay? And but at the end of the day, everything you see here is still higher, low. Everything you see in these patterns are still higher highs and higher lows, but in just a different type of dimension. Still in the topic of keeping it simple, it's still higher high and higher low, but just in a different dimension. Okay, this is your higher low, this is your higher low, higher high, and then there's a range, which is internal structure. Creates a new higher high, comes down to create a new higher low that taps into this range. Starts this range and then goes up to create a new higher high. You see? Higher high, higher low. You see? No stress. No stress. We also have continuation patterns. Need that. We also have continuation patterns, right? Hold on, let me try command. So it's command. So we also have continuation patterns, right? I was on a GPUSA. So that's it. I just copied and pasted it here. That's it right there. That's it right there. See? So this one is the first pattern, this one is the second pattern, just one retracement down and move up and then gradual fill up. We also have continuation patterns like, let me see, something like this. We have continuation patterns like this, a pull up, a range, a pull up and a tap to the tip of the range, just the top of that range right there, just the top of that range, and then continues to buy. Just the top of the range. Just the top of the range, right there. Just the top of the range. You know, the first pattern gradually filled up. It entered into the range. But the one that does not really gradually fill up, just taps to the top of the range and then moves on. So there are two types. When you see the price moving down like that and has created this type of range, the best belief is most likely not going to break that range. You just tap to the top of the range and move. If you just tap there, let me go back to AUD. Let me show you. No, it's not the one I want to show you. Don't worry. It's not the one I want to show you. Then that pattern. As I'm talking, more patterns will be coming up in my mind. Okay. So I hope we are jotting things down so I can take things away. Okay. So that's it. I think I should take away this watermark. We're going to change the watermark in here. Okay. So that's the second one. So see, first one has a variation, and then the second one, it also has a variation. They are just continuation patterns, right? Just continuation patterns. The one that does not range at all taps to the top and then moves. No range, no fill up, nothing whatsoever. Just taps and moves. Just taps and moves based off of this point here. Hey guys, I'm not teaching you gibberish. I'm not teaching you gibberish. Okay? Listen closely. Okay, you will need it to. But we are still going to more complex ones now. These are just the simple ones. These are simple continuation patterns. Market is bullish, create something like this. You know that, oh, because of this creation, market will continue to be bullish. So market is bullish on maybe 1 hour. You can go to your 5 minutes time frame and look for models like this for your continuation to join the buy. So your 1 hour time frame will just look like a massive candle, but your 5 minutes time frame or your 3 minutes time frame must have created something like this in between where you will continue from. So inside that 1 minute, inside that one full candle on the 1 hour, you are seeing your entry and your stop loss within that candle. Somebody seeing it will just say, why is your entry and your stop loss inside one 1 hour candle? They don't know that your 3 minutes candle has given you a very perfect setup, that your stop loss cannot will be very small for it. All right. All right. So this is basically. And then it's still almost the same thing for reversal models, right? It's still almost the same thing for reversal models. Almost the same thing for reversal models. Let me show you quickly. Let me show you quickly. Reversal models. So we have, say the market's on a buy, like this. We have a range. Yeah, everybody's quiet now. We have a range. We have a pull down, tap into that range, and then the sell off. You see, the market came from a buy, ranged, instead of breaking up and gradually filling like this one or coming back down to tap, it broke it below. Change of market structure straight up, right there. You know, market comes right in there, taps and moves. That is another structure. The second one will just be the one that does not range at all. So it's just two models like that. It's just two models like that. Now, you see this model? This is simple change of character model. But you see, this simple change of character model, simple change of character model. But we'll explain better how this works. We'll mark the whole range. Yes, that whole range, look at it. Look at this very one. Now, the entry is not from here. The entry is from here. The other block that must have been formed far away here. That's where the entry will be. This is the whole range you are marking because that A range is where your entry is. All right. Okay, so let me try to shrink it in and give you guys some moments to most likely take a screenshot of these models and draw them down. I need you to, everybody will draw it. That's your assignment. You will draw everything. If you like, don't draw it. It's you that yourself you are doing, Sha. It's not me. Okay, guys, I'm back. The model on the bottom left, it is also right to regard the top or the range as liquidity. Yes, bottom left. This is the bottom left. This is the bottom left. The top of the range as liquidity. Most times, the last spike always takes out liquidity. Let's not even see ourselves. Most times, the last spike takes out that liquidity and just comes down like that. And now it looks like this. Looks like this. Please help explain how to use it on higher time frame market structure information with entry. Okay. Now you see, once this time ends, join again with the same link. Very important. Very, very important. You join again with the same link. I hope I'm still recording this thing. Okay. Very cool. All right. Okay. On the higher time frame, most times, right? You can see this patterns form. You can take your entry directly from there, like what we just did on the Euro AUD here, right? We don't know what will happen. We might buy, we might sell. We don't know what will happen, but we use that pattern to get our entry right there. This pattern here was what we used to get our entry right here, right? This is on the higher time frame. Okay. But you can also come down, decide that, okay, now that we have seen this pattern form like this, normally the pattern actually came, this is where the entry is here, but we missed it. I told you guys we missed it, right? You'd have taken your entry from me on the 1 hour time frame and then just sleep. All these patterns can be your entry on the big time frame, can be your entry on the small time frame. I repeat, all these patterns can be entries on the big time frame, can also be entries on the small time frames. Okay, so the correlation basically is that when you see it on a big time frame, scale down to the small time frame and still look for these things, still look for a fresh structure to form. But have all these things in mind so that when you see it form, you are not lost. I have everything in my head. Like most times I just look at the chart, I am seeing a pattern that I have practiced over and over and over again form. Also, you can just